Take a look at your neighbor. He might be using a private lender right now. You have poor credit. You don't have the income to qualify. You owe money to Revenue Canada. Believe it or not, they don't like that. With private lenders, it's a little bit different. Private lending is based on the risk that you are taking. Hello, folks, and welcome again to the Mortgage Den. I'm Nick Da Silva, principal broker here at Northwood Mortgage. And today, one of your favorite topics, we have mortgages for Lisa. Welcome, Lisa.
Thank you, Nick. Thanks for having me back.
Today, Lisa, what are we talking about?
We're talking about private lending, specifically understanding what private lending is.
As mortgage brokers, our job is to go and find you mortgages through many different sources. So we go to banks, trust companies, monoline lenders. These are companies governed by the National Housing Act. And then we also look to credit unions to provide mortgages. When those companies don't want to lend to you, we have to look for other sources. And so we have investors who are not regulated by the National Housing Act who have to use mortgage brokers, and they were prepared to lend you money. These are finance companies, these are private individuals, and these are mortgage investment corporations.
But who typically uses private lenders?
So private lenders really is for anyone who cannot get regular financing through a bank, trust company, credit union, or monoline lender. And we've lent in all neighborhoods, right from the ritzy neighborhoods to the not so ritzy neighborhoods. Take a look at your neighbor. He might be using a private lender right now, okay? Take a look at some of your family members around the table. They may be using private lenders at this point in time.
Why private lending?
Well, why would you use a private lender? Other lending institutions don't want to lend you money. Reason could be anywhere from you have poor credit, you don't have the income to qualify under their stringent regulations, you owe money to Revenue Canada. Believe it or not, they don't like that. You owe money to property taxes. Again, these institutions don't like that. You're going through a marital split. You are buying a house and selling your house, and you're not taking a mortgage out on the new house you're buying, but you need financing to bridge that type of situation. The institutions don't want to give you the money because you're going to be paying them out within 30 to 60 days. They make no money off of you. You're in bankruptcy. You're doing a consumer proposal. You want to do debt consolidation. You may also want to just take money out of your house to give you the opportunity to prepare for the move to some other form of housing. And so you need something to bridge you during that time frame. These are some of the reasons why people use private lending.
Let's talk about how it works. Can you walk us through what happens when someone applies for a private mortgage?
A private lender has to go through a mortgage brokerage company unless they have a license to lend to the public. So what most people do is they'll first apply to their favorite Northwood Mortgage broker or agent, and that person will do the necessary underwriting to ensure that they can get a mortgage. If they can't get a mortgage through a typical institutional lender, then they will propose using a private lender to do this.
How do interest rates work? Like how do they set fees and interest rates with private lending?
Now, your typical institutional lender lends money based on money that they have from investors. With private lenders, it's a little bit different. Private lending is based on the risk that you are taking. So the investor or the private lender is going to take a look and say, how much risk am I taking and what return am I prepared to receive? So the bigger the mortgage is from what's called a loan to value position, the higher the rate's going to be. And the compensation to the investor is going to be a combination of an interest rate and most likely what's called a lender fee.
How long are private mortgage terms usually, and what happens when they come up for renewal?
Now, private mortgages are really a band-aid solution to a problem that you have. If you've got to consolidate your debts to improve your credit score, if you need money temporarily to sell one house and buy another house, if you need money to pay back income taxes or your property taxes, or if you just can't afford a home anymore and you just need a little bit of money to hold you over while you make arrangements to move. These are some of the reasons that people take private money mortgages. Most of them are one-year terms. Really, it's a band-aid solution to a problem that should be fixed within 1 year.
What types of properties are best suited for private lending?
Well, most private lenders will accept residential homes, single-family dwellings or semi-detached, townhouses, and probably with a little less exposure, condominium apartments. They will lend against commercial properties, but that takes in a whole different form of underwriting to get something along those lines approved.
Let's talk pros and cons. What are some of the main benefits of private lending for borrowers?
So for private lenders, they don't have as stringent underwriting criteria as the institutional lenders do. They don't report to OSFI. So getting a mortgage from them is a little bit easier to obtain. The money is more readily available and quicker to obtain. Private lenders don't have as much of a restriction on what the funds are being used for as institutional lenders. So those are some of the benefits of using a private lender.
Are there any downsides people should understand before deciding to go this route?
Yes, there are some cons and drawbacks from using a private lender. First and foremost, the cost. It is definitely more expensive to use a private lender. Secondly, these are good for 1-year terms. You have 1 year to resolve your issue. The lenders may not want to renew after the 1 year, and if they do, they will charge you a fee to renew. So you have a cost factor that's involved there. The downside too is that usually when you're using a private lender, you require a lawyer and the lender requires a lawyer. So your legal fees now almost double in cost.
But how can private lending help people who have been turned down by the bank?
Private lenders can help you fix the problem. The bank has turned you down. They've given you the reasons for turning you down. Now it's your chance to go and fix the problem. If it's your credit score, which is a number that's derived from Equifax or TransUnion, you can improve it by going and paying off your debts. If it's property taxes, if it's income taxes, you can go and pay that stuff, get it resolved, and then go back to the bank about a year later and say, hey, I fixed my problem. Now, can you lend me money?
How has the demand for private lending changed in the last few years?
With the new regulations coming out from the government, with the higher interest rates, which are now allowing people to qualify for mortgages, demand for private money has gone up significantly. We've also seen a downslide in the value of properties, and the 1 year time frame has sort of now drifted to 2 and 3 years. Again, remember, this is a band-aid solution, and most people should be out of this in a year. Typical rates are in the high single digits, low double digit range. This is much, much more expensive than your typical institutional lender. We've seen much more demand for private money. And unfortunately, the exit strategy that people have planned for themselves just has not panned out over the last 2 or 3 years. One of the other cons of using a private lender is that they're more readily to start legal action if you miss payments. They have taken more risk, so they deem themselves at a much higher risk than a normal institutional lender, and they will not wait around to start legal action. You'll also find a lot of extra fees attached to a private lender. Again, they're not a major institution. They don't have other means of income. And if they are forced to make collection calls, to hire lawyers, to hire real estate agents, hire property managers, all these costs get passed on to the borrower. And this could be easily a much more expensive mortgage than was previously anticipated. Private lending has its place in someone's appetite for borrowing, but it should not be looked upon as a long-term play in their mortgage portfolio.
Nick, what advice would you give to someone considering a private mortgage for the first time?
I would suggest that they make sure that they have a properly thought out exit strategy moving forward. Private money is easy to get. Lenders are usually willing to renew the mortgages, but you're paying a high price to obtain this money. So if you're going to do this, make sure that you have a plan to have this paid out probably within the 12-month period.
What should borrowers watch out for before signing a private lending agreement?
Borrowers should really have a lawyer go through a private lending agreement so that they understand the cost of the borrowing, the terms and conditions. Some of them can be very restrictive, especially if the mortgage falls into default. Make sure you know what you're signing before you get involved in it.
Do you think more people will be using private mortgages in the future?
Unfortunately, more people will be using private mortgages in the future. We live in an economy that forces us to borrow money if we want, the toys and bells and whistles that everyone else has out there. Housing is much more expensive. Jobs are not guaranteed these days. And unfortunately, no one teaches people about mortgages in high school or university. So people come out and they think they could do whatever they want. They buy a house and then they go buy another car. They put their kids into, after school activities. They spend. And then something has got to give. So they don't pay their taxes. They don't pay their property taxes. Payments on their credit cards get missed. All that adds up to being a disaster waiting to happen. And so when they go back to their bank, the bank looks at them, and again, this is not a personal relationship with the bank. You are a number at the bank. So the bank takes a look at you, tells you can't get the money anymore, and where do you go? How do you solve the problem? Private lenders are there to solve the problem. Again, it's a band-aid solution. We fix your problem. However, you got to be ready to take the next step, which is to find a way out of the private lenders.
Thank you, Nick. That was really informative.
And folks, thanks for watching Mortgages for Lisa. Thank you, Lisa.
Thank you, Nick.